Heya Cryptozens. Tonight's show: Wintermute hack replicated, CFTC sues Digitex, and the Digital Trading Clarity Act of 2022. It's 10 p.m. Pacific. The date is October 2nd, 2022. Welcome back to the Crypto Overnighter. My name is Nikodemus, and I'll be your host. The cover model, mascot, and co-host for this podcast is Tex, and together we take a nightly look at the crypto, NFT, and metaverse space and the industry that surrounds it. And keep in mind, nothing in this show should ever be considered financial advice. On September 20th, Wintermute was hacked. They lost over $160 million in a private key hack. And short hours after the UK crypto market maker was hacked, researchers figured out that this was due to the profanity vanity address generator. And as we reported, James Edwards, in his first post on Medium under the name Libra Hash, he suggested that the way that the smart contracts were manipulated and ultimately exploited, he felt that it had to be an inside job. He said, quote, "The relevant transactions initiated by the EOA, externally owned address, make it clear that the hacker was likely an internal member of the Wintermute team." And he went on to say that the EOA that connected to the compromised Wintermute smart contract was compromised by using the profanity address generator tool. They said, quote, "The idea is that by recovering the private key for that EOA, the attacker was able to make calls on the Wintermute smart contract, which supposedly had admin access." Now, Wintermute and others, they disagreed with that analysis. BlockSec is a blockchain security firm. They said, quote, "Our analysis shows that the report is not convincing enough to accuse the Wintermute project." Well, apparently the Amber Group wasn't convinced either. They're a crypto finance service provider from Hong Kong. And on their blog, they were talking about replicating the hack, that it could be, quote, "build a better understanding of the attack surface spectrum across Web3. So after the attack, the Amber Group went to work replicating it. Less than 11 hours later, and they were set up. They were using a MacBook M1 with 16 gigs of RAM to replicate the event. That was far faster than previous estimates of how long it would take with a far more modest setup. Those estimates said it would take 1,000 GPUs 50 days to crack the private key. In a tweet, they announced, quote, "We have reproduced the recent Wintermute hack, figured out the algorithm to build the exploit. We were able to reproduce the private key on a MacBook M1 with 16 gigs of memory in less than 48 hours. And they left a note on-chain to prove their claims." The Amber Group detailed the process they used the whole way. They documented everything from getting the public key to reconstructing the private one. According to them, the vulnerability comes from how profanity generates random numbers for the vanity addresses they produce. That the process isn't truly random and could be easily regenerated. Quote, "We figured out how profanity divides the job on GPUs. Based on that, we can efficiently compute the private key of any public key generated by profanity. We pre-compute a public key table, then do reverse computation until we find the public key in the table." They have also issued the same warning repeated by others. They said, quote, "As well documented by this point, your funds are not safe if your address was generated by profanity. Always manage your private keys with caution. Don't trust, verify." As we like to do on this show, let's take a look at the numbers. At the time of writing, the global crypto market cap is $923 billion. That's down 1.24%. The top 5 cryptos by market cap are Bitcoin down 0.68%, Ethereum down 1.85%, Tether, USDC, and Binance Coin up 1.5%. Adam Todd is the founder of Digitex. The U.S. Commodity Future Trading Commission has charged Todd with multiple violations of the Commodity Exchange Act, or CEA. According to the complaint that was filed in the Southern District of Florida, Todd has been running an illegal crypto derivatives trading platform using several corporate entities. These include Digitex LLC, Digitex Limited, Digitex Software, and Blockster Holdings Limited. And while this is their first time going after a DeFi platform for failing to register, this shouldn't be a surprise to anyone. The CFTC has been talking about DeFi for a while now. The previous commissioner, Berkowitz, hinted in this at a speech from June of last year. He said, quote, "Not only do I think that unlicensed DeFi markets for derivative instruments are a bad idea, I also do not see how they are legal under the CEA." According to the complaint, it's because Todd never registered the Digitex platforms with the CFTC that makes him guilty of violating the CEA. And not only is he accused of violating the CEA, Todd stands accused of failing to put in proper Know Your Customer practices as required by the Bank Secrecy Act. That's just 5 years by itself. Interestingly, in 2020, Todd said that he planned to remove all KYC procedures from Digitex. He said it was to protect user data. And more, Todd is accused of engaging in a pump and dump scam on Digitex's native token, DGTX. They said that he pumped the token to inflate Digitex's holdings, that he was pumping it using third-party platforms. So the CFTC is looking for civil penalties, disgorgement, restitution. Additionally, trading and registration bans against Todd and the Digitex-related entities. As we like to do on the show, let's take a look at the numbers. At the time of writing, Digitex's token is down 2.63% on the day. The coin dropped 12% when the suit was filed. It is effectively at zero now. It has a fully diluted market cap of around 53,000. So, not much. Now, the CFTC has been making moves lately. They settled charges against the founders of B0X and the BZX protocol just last week. They claim they, quote, illegally offered leveraged and margined retail commodity transactions in digital assets. They went after UkiDAO too. Now, there's some question about whether that was appropriate or not, because they're charging the Uki with the same thing that they took control of the BZX protocol in August of 2021. Right now, both the CFTC and the U.S. Securities Exchange Commission are trying to position themselves as the ones to regulate the crypto industry. There are a number of pieces of legislation moving through Congress right now in an attempt to answer that question. That said, both the SEC and the CFTC have been heavily criticized of late, specifically for regulation by enforcement. The global NFT market cap is down 5.63%. Sales volume is down 6.7%. According to CoinMarketCap, the top 5 NFT collections by sales volume are CryptoPunks, followed by Otherdeed, Bored Apes, Mutant Apes, and CloneX. Now keep in mind, some of these collections have very volatile prices, so do your own research. Bill Hagerty is a U.S. Senator. He's also a member of the Senate Banking Committee. He introduced a legislative package recently. This legislation is designed to provide something of a safe harbor for crypto exchanges, to keep them safe from certain Securities Exchange Commission enforcement actions. So Senator Hagerty introduced the Digital Trading Clarity Act of 2022, and it's all in the name. The bill is trying to establish some regulatory clarity around two things that cause issue for crypto exchanges: the classification of digital assets and the related liabilities under existing security laws. Hagerty wrote an overview of the problems. Quote, "The current lack of regulatory clarity for digital assets presents entrepreneurs and businesses with a choice: navigate the significant regulatory ambiguity in the U.S. or move overseas to markets with clear digital asset regulations." According to Senator Hagerty, This regulatory uncertainty discourages people and institutions from investing in crypto and hampers job creation opportunities. Haggerty says that this regulatory uncertainty, quote, jeopardizes the United States' leadership in this transformational technology at such a crucial time. Now, it appears to be the senator's belief that this legislation, if passed, not only would it provide much-needed certainty to crypto businesses, it would improve the growth and liquidity of the U.S. crypto markets. He said, quote, startups are choosing to move overseas to countries with clear regulations in place. The murky water surrounding crypto regulation in the United States force entrepreneurs to set up shop elsewhere. This bill joins a growing list of legislation designed to provide clarity around the classification of digital assets. It comes as Senators Marsha Blackburn and Cynthia Lummis introduced amendments to the Cybersecurity Information Sharing Act of 2015. This one would allow, quote, voluntary information sharing of cyber threat indicators among cryptocurrency companies. So, it would let companies in a distributed ledger technology field report problems like network damage, data breaches, ransomware attacks, and other cyber threats for possible assistance. Now, the original bill was passed in October of 2015, and it has a time limit. It was set up to be in effect for 10 years. It was set up to coordinate cybersecurity reports from multiple types of entities. This bill would provide a way for crypto companies to, quote, report bad actors and protect cryptocurrency from dangerous practices. If successful, this legislation would be renamed the Cryptocurrency Cybersecurity Information Sharing Act. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, please like, share, subscribe. Anything to get this show some attention. In the meantime, take care of yourselves, but take care of each other too. We'll see you tomorrow night.